Welcome back to the Malaysia Money Matters show. It's the 22nd of April, 2025.
Good to be back.
Today, we're doing another deep dive, looking into the latest financial and business news that's affecting Malaysia and, well, the wider world, too. We've gone through the articles you shared.
Yep, quite a few interesting bits this time.
Definitely. So our mission today is pretty straightforward. Break down these headlines, figure out what they actually mean for you, our listeners, and try to bring some clarity to, well, a pretty complex economic picture right now.
Sounds good. Where are we starting?
We'll kick off with Malaysian company news, then touch on the international and political side, keeping it focused on the impact,
Right, and then wrap up.
Exactly. We'll pick out what we think is the most exciting piece of news from the bunch.
Okay, let's get into it. Malaysian companies first.
Yes. First up is AirAsia X. Looks like they're boosting their Kuala Lumpur to Almaty flights.
Yeah, increasing frequency from 4 to 5 times a week. Apparently demand is surging.
Surging seems right. They mentioned flying over 100,000 passengers since launching the route last March. That's quite something.
And keeping a 90% load factor consistently. That's impressive. It really shows there's a solid market there.
It does. And they've also signed an MOU, a Memorandum of Understanding with Almaty Tourism.
Ah, okay. So that's about boosting tourism flow, both ways.
Seems like it. Positioning Almaty for travelers from Southeast Asia, Malaysia, Singapore, Indonesia specifically.
That timing feels, well, deliberate, doesn't it? With Malaysia chairing ASEAN next year.
And the big Visit Malaysia 2026 campaign, what are they aiming for? 45 million arrivals?
Something like that, yeah. And RM 270 billion in receipts. Huge numbers.
So this Almaty connection, especially with their fly-through system linking to the rest of Asia-Pacific, it fits right in.
Definitely a strategic piece of the puzzle, though their shares did dip slightly, interestingly.
Yeah, down about 1.96% to RM 1.50. Market jitters, perhaps, despite the positive news.
Could be. Short-term fluctuations happen. But the underlying story seems strong, tapping into real demand, supporting national goals.
Okay, moving on. Let's look at the economic forecasts for Malaysia. Some diverging views here.
Ah, yes. CGS International Securities Malaysia. They've revised their 2025 GDP growth forecast downwards.
Down to 4.2% from 4.6%. That's below the official 4.5% to 5.5% estimate.
They're citing a weaker than expected first quarter, apparently, and also the balance of risks.
Including that front-loading effect because of the 90-day U.S. tariff pause.
Exactly. Shipments to the U.S. apparently soared 50% year-on-year in March. CGS seems to think that boost might be temporary.
So the Department of Statistics, DOSM, they're expecting 4.4% for Q1 growth, right? We get the final numbers mid-May.
Yeah, May 16th. But CGS sees underlying strength domestically. Labor reforms, wage hikes, low inflation helping consumption.
But others are more optimistic. Kenanga Investment Bank.
They're sticking with 4.8% for 2025. They also see that front-loading happening, but maybe more in Q2 because of the tariff pause.
And then there's Hong Leong Investment Bank, HLIB, more cautious again.
Yeah, forecasting a softer 4% growth. Below Bank Negara's target. They're worried about softer external demand and, well, trade uncertainty.
HLIB even thinks B&M might keep the OPR at 3% for now, but maybe cut rates later in the year, like 25 basis points.
Potentially down to 2.75% in the second half. It really paints a picture of navigating cautiously through global headwinds while relying on domestic strength.
A lot of uncertainty baked in. Okay, let's shift to Kayamata Sarawak, a big contract win for them.
Right, RM 550 million from the Sarawak state government for the Borneo Convention Center Kuching II, the BCCK2.
That's a major project. It's through CMS Land, which is majority owned by Kayamata, right?
Yep, 51% Kayamata, 49% TDC, the Sarawak Economic Development Corporation.
And the contract covers everything: design, construction, fit-outs.
Pretty much the whole package. Starts this month, April 2025, aiming for completion in early 2028.
They seem confident about managing the supply chain side of things.
Well, they have their own cement and construction materials businesses, so those synergies probably help a lot. They expect it to positively impact earnings right through to 2028.
Makes sense. And their recent results were strong too, weren't they? Q4 profit up significantly.
Yeah, net profit of RM 65.8 million in Q4 FY24, up 85% year-on-year, highest since Q3 2022. Revenue also up.
Yet their shares also slipped a tiny bit, 0.55%. Seems to be a theme today.
Small moves. The big picture is that significant multi-year contract. That's solid news for them.
Okay, next up, Eco World Development Group. Their shares actually rose.
nearly 5%.
Hmm.
It's linked to progress on their big industrial park plan, right? Eco Business Park 7th.
Yeah, the RM3 billion project in Malaysia Vision Valley 2.0, they've signed a tripartite agreement.
With SD Guthrie and the Najeri Symbol and State Agency, NS Corporation, EcoWorld taking the majority stake, 55%.
And they're buying the land, about 1,200 acres, from SD Guthrie for over RM 570 million. Plus, they'll be the development manager.
Analysts seem pretty positive on this. Good for EcoWorld's long-term growth, given the demand for industrial assets, and the land price around RM11 per square foot is seen as fair.
Doesn't seem to impact their balance sheet too much either.
And for SD Guthrie, it's a way to monetize some of their land holdings, a potential gain of around RM 430 million for them.
They own a lot of land in Najeri Sembilan, don't they?
Tens of thousands of hectares, yeah. So good for EcoWorld, good for SD Guthrie monetizing assets.
Right. Let's talk Kipper Eats. Impressive results for their third quarter.
Very impressive. Net property income, NPI, jumped over 50%, 51.9% to be exact, hitting RM 27.48 million.
What drove that? Stronger malls and new properties coming online.
Exactly. Contributions from Depot Shopping Center, TF Value, that industrial asset, CR35. Plus, their existing KIP malls did really well too, NPI up 23.3%.
Higher occupancy, better rents. And they mentioned SD Rosin Mart as a new anchor tenant in Senawang.
Yep, that seems to have helped. Revenue is up strongly too, over 60%. And retail occupancy is really high, 97.2%.
Solid performance. They declared a DPU of 1.60 sen as well.
And they sound cautiously optimistic about the future, focusing on community-centric locations, expanding the portfolio.
Yeah.
There was mention of an AEON collaboration.
Yeah, potential development collaboration. Seems like a focused strategy. Shares closed flat, though.
Steady Eddie. Okay, who's next?
Malaysia Aviation Group, or MAG. This is interesting. They might try to speed up getting new Boeing planes.
Oh.
Apparently, delivery slots might open up if Chinese carriers face issues due to the U.S.-China trade war. MAG is talking to Boeing about potentially taking those slots.
Wow. Okay. That's opportunistic. Would these be on top of their existing orders?
Yeah, separate from the 25 leased planes they're getting from Air Lease Corporation, ALC. Those deliveries are already happening, running into early 2026.
So buying new planes outright would mean raising more capital, presumably.
You'd think so. And they need to consider things like where the plane is in production, the cabin setup.
Yeah.
It's not simple.
But it fits with their longer-term strategy, shifting more towards wide-body aircraft by 2035.
Seems like it. Addressing airport congestion in ASEAN capitals, they're also thinking about expanding or replacing their A350 fleet eventually.
Okay. And they mentioned careful management of that Khazanah capital injection, using only RM 1.3 billion out of RM 3.6 billion so far.
Right. And aiming for that 50-50 owned versus leased fleet balance to manage costs. This potential Boeing deal could really accelerate things if it happens.
Very strategic maneuvering. Okay. What about Panasonic?
Good news there. Their Shah Alam plants are fully back online after that gas pipeline explosion earlier in April.
Ah, right. That happened on April 1st. So production of fans and irons is back to normal.
Fully restarted last Sunday, they used alternative gas sources to keep things going as much as possible.
And they're aiming to recover the lost revenue this quarter. They thought it might hit annual revenue by about 3%.
Yeah, hopefully they can make it up. Their shares were unchanged.
Good to see them recover quickly. Anyone else on the Malaysian front?
People's Elegy launched their IPO on the ACE market, aiming for about RM 26 million.
What do they do again? Consultancy? Training?
And online learning platforms. They want to use the IPO funds for a cyber range simulation lab, R&D, expanding overseas Indonesia, Philippines, and setting up a regional office in Singapore.
Interesting space. Though their net profit dipped last year even as revenue grew.
Yeah, something to watch. Founder stays the largest shareholder. Kenanga is handling the IPO.
Okay. And RHB Investment Bank.
Less cheerful news.
They've turned bearish or maybe just more cautious on the banking sector here, worried about global tariffs.
The ripple effects. They think rising tariffs, especially U.S. ones potentially hitting 20% by late 2025, could slow Malaysia's growth.
And hurt bank earnings in the short term. Lower loan demand, maybe shrinking net interest margins if B&M cuts rates.
Fees could take a hit too. So they've trimmed their earnings forecast for the sector slightly for FY 25-26.
By 2-3%. Still keeping a neutral outlook overall, but highlighting Maybank, Hong Leong, and CIMB as top picks. They expect bank shares might dip further, though.
A cautious note for the banks. Okay, Salkin. They're buying into the dental business, acquiring 70% stakes in 2 dental groups in Penang.
Tria Dental and WS Dental. for nearly RM 10 million combined.
Correct. It's part of their diversification strategy, expanding their healthcare division, gives them a stronger presence in the private dental market up north.
Includes profit guarantees too for FY26 and FY27, financed internally. Shares dipped slightly.
Then CIMB Investment Bank also weighed in on the tariff pause.
Similar view to others. Short-term boost from front-loading, but overall caution.
Pretty much. They see it supporting near-term trade and manufacturing, especially exports. But global headwinds, U.S. trade policy, U.S.-China tensions, they keep the outlook cloudy.
Still projecting 4% GDP growth for Malaysia in 2025.
Yes. And they also think BNM might cut the OPR by 25 basis points, possibly in July, to support domestic demand. They noted Q1 growth eased more than expected, but might get revised up because of that March export surge.
So consensus seems to be, enjoy the short-term export bump, but brace for uncertainty.
It seems that way. Lastly, from Malaysia, West Coast Expressway Holdings. Their unit got government consent for a big loan.
WCE, how much?
RM 1.15 billion term loan from Bank Pembangunan, Malaysia, to help finance the ongoing West Coast Expressway project costs.
That's crucial funding. Most sections are open now, aren't they? But a few still under construction.
Yeah, 8 out of 11 sections are operational. Sections 3, 4, and 7 are still in progress. Shares were down a bit, too.
Okay, that wraps up the Malaysian side. Quite a mix of news.
Definitely. Shall we move to the international and political scene?
Let's do it. Where do we start? Bank of Japan.
Yes. They're expected to signal next week that basically rising U.S. tariffs won't stop them expecting wages and inflation to rise in Japan.
So they're sticking to their guns on the path towards potential future rate hikes, despite global risks.
Seems so. They're pointing to job shortages in Japan, pressuring companies to keep raising pay. Their baseline is still a moderate recovery.
Interesting contrast to the caution elsewhere. What about China's lending rates?
They kept them steady. 6th month in a row. Matched expectations.
That strong Q1 GDP growth, 5.4%, probably gave them some breathing room. Less pressure for immediate easing.
Maybe, but markets still expect more stimulus eventually, especially with the U.S.-China trade war heating up again. Plus, they're worried about the yuan weakening and bank profit margins shrinking.
And export data hasn't fully shown the tariff impact yet because of that front-loading we talked about.
Exactly. Global banks have actually lowered China's growth forecasts and expect more monetary easing down the line.
And speaking of trade impact, China really cut back on buying U.S. commodities in March.
Sharply. LNG and wheat imports dropped to 0. Cotton, corn down significantly.
Soybeans went up, though. 12% increase? That's odd.
Bucked the trend. But LPG, coal, copper scrap also slumped. Crude oil imports did rise, however.
A very mixed bag, driven by trade tensions and potential tariffs. Now, palm oil versus soybean oil.
Right. CPO's discount to soybean oil is expected to stick around until Q3 this year because palm oil output is high.
Makes it more competitive price-wise. So India's been buying a bit more.
Yes, and China might too, as an alternative to U.S. soybeans, given the tariffs. Soybean oil prices are also being affected by U.S. biofuel policy, and China buying more from Brazil.
HLIB research is neutral on the sector for now, forecasting CPO prices around RM 4,400 to RM 4,600 later in the year.
That lower price definitely spurred demand from India. CPO usually trades at a discount, but it had that rare premium late last year into March.
Supply concerns back then, and Indonesia's B40 biodiesel mandate pushing up demand.
Okay, shifting gears dramatically. The U.S. dollar took a tumble.
Yeah, quite significantly. Investor confidence got hit by President Trump's potential plans for the Federal Reserve, questioning its independence.
There was talk he was looking into whether he could actually fire Fed Chair Jerome Powell.
An advisor said he was still studying it. The dollar sank decade low against the Swiss franc. Euro went above $1.15.
Wow. So markets are worried Trump could undermine the Fed's independence.
That seems to be the core concern. Dollar hit a 7-month low against the yen too. Asian currencies strengthened.
And gold. Safe haven buying.
Surged. Above US $3,400 to a new record high. Weak dollar, US-China tensions. Classic drivers for gold. Analysts see the trend continuing.
Makes sense. What about Indonesia's palm oil exports?
They eased slightly in March compared to February, mainly due to higher local consumption during Ramadan.
It's still pretty high for March historically, highest in 4 years.
Yeah, and higher year-on-year, which should help reduce stockpiles and support prices. Attractive pricing compared to Malaysian CPO helped too. April exports expected to be higher.
Okay. Foreign investment flows in Asia. Still negative.
Unfortunately, yes. Net selling of U.S. $3.84 billion from Asian markets for the week ending April 18th. That's the third straight week of outflows.
Only Philippines and India saw net inflows.
Correct. India led the way, maybe due to easing inflation there and a resilient domestic outlook. Taiwan saw the biggest selling.
What about Malaysia?
Net selling eased quite a bit on Bursa Malaysia, down to RM 330.5 million. Telecoms, consumer, property saw some inflows. Financials, tech, construction saw outflows.
Local institutions still buying.
Yes, while retail investors turned into net sellers. Trading volume was down across the board, shows continued caution.
Got it. Quick mention, Navis Capital raised US $230 million for its Southeast Asian education platform.
Backed by TPG Newquest, shows continued interest in that sector.
And oil prices retreated.
Yep, trade war concerns hitting energy demand forecasts again. Plus, markets watching U.S.-Iran talks on the nuclear program. Brent fell towards $67, WTI below $64.
Okay. AM Invest's take on U.S. tariffs on Chinese gloves.
They think it can help Malaysian players grab more U.S. market share.
Right.
But it's not enough to fix the fundamental oversupply issue in the global glove industry. They're still underweight on this sector, projecting oversupply until 2027.
So cautious still. Supply dynamics, costs, Chinese players shifting strategies. They even lowered Hartalega's target price. Don't see ASPs rising sustainably.
Basically, yes. The structural issues remain.
Okay. Paradigm REIT's IPO, the retail portion is fully underwritten now.
By Maybank Investment Bank, CGS International, and ME Investment Bank, backed by those big malls, Bukit Tinggi, Paradigm PJ, Paradigm JB, and they get first refusal rights from WCT Holdings for future properties.
Seems like a solid backing. And finally, back to Trump and Fed Chair Powell.
Seen as just another reason to sell U.S. assets right now. Dollar down, U.S. stock futures down, Treasury yields up.
Adds to the tariff concerns. Investors weighing the risk of Powell being dismissed and what that means for Fed credibility and the dollar.
Some hedge funds reportedly selling the dollar, though some analysts think tariffs are still the main driver. There's also a legal question about whether Trump can fire a Fed chair just like that. Markets watching a Supreme Court ruling, too.
A lot of political uncertainty feeding into market moves.
Definitely adds another layer of complexity.
Okay, wow. That covers a lot of ground internationally.
It certainly does, from trade wars to central bank politics.
So let's bring it back. Out of everything we've discussed, what stands out to you as the most, well, exciting or interesting news today?
That's a tough one. There are some significant shifts happening, but I think I'd circle back to that AirAsia X story, the Almaty route.
Yeah. Why that one specifically?
Well, it's the combination, isn't it? It's not just one airline adding one flight. It's the proven demand. Those load factors are really high. It connects directly to Malaysia's bigger picture goals, like the ASEAN chairmanship and Visit Malaysia 2026.
And that MOU with Almaty tourism adds another layer.
Exactly. It feels like a tangible example of Malaysia actively building bridges to new, maybe slightly unexpected markets. Central Asia isn't always top of mind for connectivity.
True. It shows ambition beyond the usual routes. And the fact that it's working so well, those full flights, it really underscores that they've tapped into something real.
Right. It makes you wonder, could this be a blueprint? Are there other underserved markets like Almaty where a direct link could unlock similar potential for tourism, for trade?
That's a great question. What does it tell us about how travel patterns might be evolving, maybe shifting away from just the traditional hubs? What other surprise routes could take off?
It's definitely food for thought. It's proactive. It seems commercially successful so far, and it aligns with national strategy. That mix makes it quite exciting, I think.
I agree. A really interesting development to watch.
For sure.
So there you have it. Our rapid run-through of the key financial and business headlines from the sources you provided. We've unpacked Malaysian company news, scanned the global landscape, and highlighted that AirAsia X development as particularly noteworthy.
Hopefully it's given everyone some valuable takeaways, maybe a few aha moments.
We certainly hope so. Remember, keeping up with all this is, well, it's an ongoing journey. If you found this breakdown useful and want to keep getting these key insights, please do subscribe to the Malaysia Money Matters podcast.
Absolutely. There's always more happening, always more to analyze.
We look forward to diving deep with you again soon.
Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. by subscribing to the Malaysia Money Matters newsletter. You will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.